Welcome back. And today I'm going to talk about Florida. I'm going to talk about the Southwest Florida from high level. Cape Coral, Florida, Southwest Florida, and Punta Gorda, and also Tampa. The stretch of coastline in the Southwest Florida around 50 mile long from Tampa to down to Cape Coral. And there's been a lot of challenging news associated with Florida in general. But I'm going to focus on the data. I'm going to use reference data to determine whether this specific area of Florida is crashing or not, or they will do a correction. I'm going to go do the supply inventory and how long the houses are staying in the listings. Very good data. There's some people, they say it's crashing due to the two hurricanes that occur in 2024, Helene as well as Milton, housing hurricane that devastated the coastal areas at least. Of course, other people talk about the insurance crisis and all that and the migration, but I only have time to, from a high level, discuss whether all those media and all those pundits and all those naysayers are depicting a true picture of the Southwest Florida housing market. Why I have the ability to do this? Because as a real estate investor, I am for the past several decades. I have invested in many housing markets as an investor. And Florida is one of the markets in which I have properties all over the country in good markets, in affordable cash flow, entry-level markets. And Florida exception, I own several properties in Florida, and I still own those properties. But most of my properties located in an inland, which is not inland in central Florida, which is virtually not affected by the hurricane or flood zone, nothing like that. And my rental properties have very good low insurance premiums because it's away from the coastal area. And hundreds of my students and my investors over the years, I guide them along to invest in hot markets, growth markets all over the country. Florida are one of them. And they have done well. Our investors have done well because we know what to buy. We're not buying in a flood zone. We're not buying in a hurricane zone. We're buying inland in a very affordable markets. We have a job growth, population growth, the whole 9 yards. So we're doing good. We're cash flowing. We getting good appreciation over time. There are some challenges. I want to refute any kind of misconception that's going on out there. I'm going to try to be as objective as I can. Without further ado, let me give you something that you want to ponder with. Now, I'm going to show you our current listing with Zillow. I know this is a small sample size, if you will. This is not the kind of property that my investors or myself buys because, hey, we're talking about a $500,000 single family home in Cape Coral. If you can only rent this for like $3,000 for rent, you're not going to cash flow. So I would never buy this kind of property. You're way above my price range in terms of a rent to value ratio. We buy something below $300K and rents for $2,500, put 25% down payment. We run the numbers and we get the cash flow. But these kind of houses are not for myself, not for my student investors, because they cannot cash flow because the cap rate and the rent to value ratio and the cash and cash return is very low. Having said that, I picked this property just to go over the worst case scenario. I just found this on the Zillow this morning as of today's date, 23rd January. Yes, 23rd January 2025. So this property is listed for $595,000. It has a price cut of $45,000. So a little bit less than 10% price drop, which is not uncommon what's going on with this stressful market. But this is a cookie cutter single family home in a very good area, close to the canal. Cape Coral have more canals than Venice, Italy, by the way. So it's a very desirable place to live. For investors and for primary home owners for many years. It has grown consistently year over year for the past 20 years with a slight downturn during the housing crash in 2000. It's a big challenge. So the problem with this property, as I see it, is built in 1961. If it's built in 1961, they're probably not built for safety code. So therefore, the insurance premium on this property, or presumably going to be very high. It's going to get increased due to the high risk environment along the coastal Florida, especially in the Gulf Coast region, Southwest Florida. That's one red flag that I could see. Okay, being this is an older home. When you buy new builds, or when you buy a home that are inland, that are in the away from the coastal area, and it's a relatively new, then the safety code, you can meet the hurricane safety code. So the insurance company love those kind of properties, and the insurance on those properties are very reasonable, but not in the coastal area. So there's one red flag. It's an older property. So if we anticipate that the insurance premium is going to go even higher than already has. Although I know this is a good location, a person can do an Airbnb short-term rental and they may do well. So I'm looking at today's presentation from the perspective as for a primary home buyer and as a real estate investor as well. Keep that in mind. Another red flag is this property has been on the market on Zillow for almost a year. We're talking 292 days. So this is potentially we have a stressful seller. I don't know the details about the seller. Stress. There's a lot of bargaining potentially that could go on. As a primary homeowner or investors can, if they do some further research in this particular property, hey, they may get a very good deal in terms of discount, concessions, or whatever from the seller, because as investors, as primary homeowners, anyone is a buyer, you want to take advantage of the stressful situation. You have leverage as a buyer, right? Anyway, so let me see what else I can see here that catch my eye. I will tell you. So that's two red flag. Let me see what other red flag. The rent estimate, I don't know, almost $5,000 potential rent. It's probably, this is not accurate. It's most likely is an Airbnb situation. I truly do not believe this is a right projection by Zillow. The long-term rent, maybe you get $3,500. And this kind of property, 3-bedroom, 2-bath, 1,600 square foot, as indicated here. I do not, you know what? As a matter of fact, I could do one more thing here, maybe, whereby I could look at, you know what? I could look at the rental meter, the rental projection comp, the software that I have. In fact, let me deviate my presentation just a little bit. Let me plug in the number, 3-bedroom, 2-bath. Let me look within the 3-mile radius. What are the monthly long-term rent that this particular property can fetch? Within 3-mile radius, there are 28 similar homes that are for rent within the same square footage, and the average rent is like $33.49. So understand, but for sure, this property is not going to cash flow at 25% down payment for our investor. You know what I mean by that, right? Because it's not meeting the rental value ratio properly. 1,600 square foot. Let's look at 1,600 square foot. This is the closest. It's rent for $2,300, which is a few blocks away. Another property, similar square footage, 1,643, not a few blocks away. Also, it rents for $2,899. So you can make an argument like $3,000 is the monthly long-term rental associated with this property. So this is where I'm going to go. So I'm going to get back to the property. $3,000 monthly rent on a long-term rental on the price. Allegedly, they are listed at almost $600,000. Clearly, if you put 25% down payment, you're not going to cash flow as an investor. Maybe you can have like $700 monthly negative cash flow, or even higher when you factor in the higher insurance premium and the property tax rate, maybe a HOA. I'm not sure whether they have, this property have a HOA. But anyway, so as I scroll down further into this particular property, another red flag I could potentially see, look at back in 2010 at the aftermath of the housing crash. This property had is a very good price. Don't you wish you could have bought in 2010 for $150,000 on this particular property? Now we fast forward to April of 2024, which is last year. We are talking like 9 months ago, and the price has increased 419% to $779, from $150K to almost $800,000 in only 14 years span. There's a good appreciation, equity growth for the owner of this particular property. And then 2 months later, at June 29th, they apparently the the seller wants, it appears they're selling this property for whatever reason, and they marked that they sell it for 10% below the price. So at $699. So whatever reason, this whole house is not selling because during the middle to the late of 2024 last year, once again, Hurricane Helene and Hurricane Milton came across Southwest Florida and devastated the coastal areas. I emphasize the coastal areas. The seller realized is a motivated seller, so they reduced the price by 8.4% to $639. And evidently, this house has been sitting on the market for almost 1 year. And now, January 23rd, 2025, the list price is $595. Another price reduction of 7%. So who knows if an investor or primary homeowner, if they do sufficient research, hey, they may negotiate for another 20% discount, and someone might buy for $499K or $510 or something like that. So the price is dropped by like 50% within the past a year or so, as you saw these chronological dates. We're not even talking about the insurance. The insurance right here, $179 per month, which is very low. It has to be a lot higher than that, maybe $300 to $400 per month, if you can, if the insurance company can underwrite this coastal property in Southwest Florida. So that remains to be seen. So I'm not going to go there. But you look at the climate risk, this additional feature that Zillow showed in terms of flood factor is extreme in this particular house. We do not know whether this house is located in a flood zone or not. I'm not going to get into that. Fire factor, minimal. No, fire factor. Wind factor is extreme. The high wind could occur at a certain time of the year. Heat factor, yeah, during summer is very hot. I get it. Air factor, minor. So anyway, hurricanes, the issue is the older house. So I see several red flags. Share with me your thoughts. Now, this is just one sample size. If I use a $300,000 property in Cape Coral, the situation may be different, but small sample size. But just to give you a heads up as to this kind of prices, $600,000, $700,000 property in Southwest Florida that are impacted by the hurricane, by the insurance crisis, by the HOA situations, is potentially a very challenging situation. So let's go over the Redfin weekly housing market data for Cape Coral. I'm not going to spend too much time on this. I'll try to give you from a high level. So new listings is pretty consistent throughout the last 3 or 4 years. Of course, more new listings coming to the market. As you can see, we're entering the winter spring market. So let's look at I'm going to look at several trends. The medium sale price 2024 is the orange color. So the orange color is pretty steady at $387,000 in Cape Coral. So we begin the year 2025 had a very high value during the latter part of 2022. But when the mortgage rate was decreased in the late 2022 from 3% to 8% rate, the medium sales price has dropped pretty significantly. But then the following years in 2023, the blue line is picked up, pretty stabilized throughout the whole year with a slight decrease in medium sales price. So far, I do not see, based on this data, the medium sales price in past 3 years. I see some slight correction, 5-10% decrease. It's not a housing crash. Do you agree? The way I define a housing crash, like we're talking 40 to 50% reduction in medium price value. So far, I do not see it. Please comment below. What are your thoughts about the for the remaining of this year and into next year as to the Southwest Florida market? So let me share with you another very important metric is the month of supply. 4 to 6 months is a balanced market. Some of these data are not very hard to analyze because during the Hurricane Milton and Helene, of course, there was no housing activity because you can't list a house for sale because everybody going through the cleaning up process in the aftermath of those two hurricanes. So that's why you see the weeks of supply toward the end of 2024 is like 41 weeks of supply divided by 4 weeks per month. We're talking like 10 months supply of inventory. So clearly, this is a buyer's market. That means there are more supply of inventory to purchase versus the demand. With the elevated mortgage rate around 7% as we speak, right now is January 23rd, 2025. This is a very challenging market to say the least. So clearly, it's a buyer's market where the buyer dictates the rates and the terms, and the buyer have a lot of negotiation power. So weeks of supply are very critical. But at the same time, there have been very little sales activities as a result of the two hurricanes. We have to realize that the data sometimes does not fully cover the big picture, if you will. So let me see what else that are important. So that's the final data point I want to share with you is average sale to list price, which is for year 2024, orange color. So at 96%, that means the final sales price is 4% lower than the final list price. So we have sold below 4% below what the seller are asking for. My takeaway on this in this market is such that yes, there's a lot of inventories available for sale. One thing I almost got active listings. These are very critical. How could I forget the most important metric? Active listings indicate the inventory level. So throughout the year, it's been very consistent. Like at the beginning of 2024, there were like 70% more inventory in Cape Coral area than from the prior year. So huge jump in inventory to the tune like 11,300 active listings back in April 2024, whereas in April 2023, there were only 6,623 listings. Then you fast forward down to the end of the 2024, which was last month, December 29th, we still have 11,704 listings. It's a 20%, 24.14% increase of inventory from the previous year over year from 2023, which is 9,428. So yes, this active listing situation is very, very disturbing, very challenging. So how are you gonna? So I see a potential downward trend in Cape Coral. I see it all depends on the mortgage rate coming up in the next few months in the spring. Strong selling season on a historical basis to see if the mortgage rate come down to a few percentage point, like 6.5% or 6.3%. Maybe we have more buyers that can absorb this excess inventory higher than 11,000 listings, active listings in the Cape Coral market. If the mortgage rate stays elevated in this unique market, the inventory will continue to be elevated, and you have more supply of inventory versus the demand in the market. Although long term is just my opinion because I know Florida so well. I own an investment property and I still own it, and hundreds of my investors are purchased in all over Florida, not just Cape Coral. Most of them have done very well. I'm not an expert at the local level, but my team, the boots on the ground, they keep me posted what's going on. Another market I want to go over. Some of you may have heard about the Punta Gorda market. Punta Gorda is a smaller market 30 miles north of Cape Coral. If you have not heard, Punta Gorda has been growing just like Cape Coral very fast, skyrocketing home prices during the pandemic due to migration from New York and California and other areas of the country. Good area, good high quality lifestyle. It's coastal area right above Cape Coral. And I've been hearing that Punta Gorda have over the past 12 to 18 months have grown so much. Now they're overbuilt. The builders are overbuilt, so they have an excess supply of inventory. Active listings, Punta Gorda is 4,282. Active listings as of December 29th, 2024, and 20.38% year over year higher than 2023. That's active listing. And let's go over the medium sales price for 2024, which is orange color right here. It has, at the beginning of the year 2024, it was selling for $355K medium sales price. Toward the end of 2024, it's down to $324. So minus 8% reduction in the medium sales price in Punta Gorda in the year 2024. That's the medium price. It was back in prior years, we're talking in 2022, the medium sales price went as high as $396,000. Now it went down to 324. So you do the math. And then, of course, 2023, it was 351. It has corrected. The median sales price have decreased double digit, if you will. So do we have enough data to deem this particular market doomed to crash? I don't know. Too early to say. We have to wait for maybe 6 more months, perhaps. I don't know. So let's look at, we already went over the active listings from in 2023. It was 1,882. And then in 2024, in March of 2024, have increased by 117% to 4,200 listings. And Punta Gorda is not that large, as you can tell, right? From 1,900 active listings in March of 2023 to March 2024 to 4,200, which is 117% increase toward the end of the year. Pretty much similar at 20% increase year over year. A lot of listings and a lot of listings in the market. So let's look at medium days in the market. Medium days in the market at the end of the year is like 61 days and 2 months medium days in the market. But back in October, in the aftermath of the Milton hurricane, there were no sales transaction during the height of the hurricane. The medium sales price at that time was 88 days, to be expected. So let me look at another data, which is, let's look at price drops. Price drops 5.4%, pretty reasonable, but the price drops occur quite dramatically at the beginning of 2024, March of 2024. The percent of active listings with price drop is 9.6%. So that's pretty elevated. So another metric we need to look into is the month of supply. 4 to 6 months is a balanced market, equal the number of demand versus supply, right? Economics 101. So 2024, again, over here is during the hurricane itself, when there were virtually no transaction. That's why you see supplier inventory is very high. That's to be expected. And now after the hurricane, back a couple of months ago, the sales activity stopped picking up. So you see the upward trend for the sales transactions. Now toward the end of 2024, we have 39 weeks of supply. Again, 4 to 6 months is balanced supply versus demand equilibrium. So 39 weeks divided into 4 weeks per month, 4 times divided into 39. What is it? 10 months? 10 months supply of inventory. Clearly, it's the buyer's market. There are more supply than demand. Punta Gorda is really extremely weak. How they're going to absorb this kind of inventory, it remains to be seen for the next 6 months, especially after the spring season. So active inventory is very elevated, as you can tell. And the final metric I'm going to use is average sale to list price toward the end of 2024. The average sales to list price is 0.94%. That means the homes that were sold, they were sold almost 6% below the final list price at 0.94%. So that tells you that the home prices are dropping in Punta Gorda for at least for the past 18 months. So my takeaway is, one of you might think otherwise, but I still do not see a housing crash yet. I want to see how much of this inventory is going to be absorbed. We need to follow the mortgage rates to see whether the demand can catch up with the supply. We do see some potentially distressed sellers that want to get rid of their houses in the Gulf Coast, Southwest Florida area because of this ongoing weather-related crisis. Some people can't take it anymore. They want to leave, go somewhere else. The low end of the economic demographics in Florida, they might want to leave gradually, not all at one time. It's not going to be a mass exodus, nothing like that. But the wealthy owners, in not only in Southwest Florida, but in all over Florida, they still feel it's a good place to live. It's a high quality lifestyle, all kind of outdoor activities, sun-built. There's no state income tax. So the higher demographics, people, the wealthy owners, they might want to stick around. They might want to stick around and rebuild because they love the lifestyle. A lot of wealthy buyers, they can use these coastal homes, which is still very precious. Many coastal homes up and down Florida, eastern seaboard coast, and the west coast and South Florida. those homes are very high priced, right? We talk about $1 million, $2 million, $3 million on the average on the coastal area. So wealthy owners, they might still want to stick around, most of them, but the lower economic spectrum of the homeowners, they might want to think about leaving. So it's not, again, my takeaway is, it's not a housing crash. Southwest Florida going through a correction. It gives any time to recover. We'll find out in the next 12 to 24 months what's going to go on with the Florida housing market. Personally, I like Florida still, but I like inland. I like Central Florida because it's away from the hurricane. My property is not in the flood zone. We still have very good low insurance rates, believe it or not, because we buy single family home, new constructions in a good strategic areas of Florida, away from the coast, for like $250,000, $300,000 single family homes. And you rent it out for $2,000, $2,200 at the gross rent. So we still cash flow. We still do well, buy the whole long term. For our investors, you have to know where to invest. So there's an opportunity for primary home buyers to get a good deal in these high quality locations. If you call many of these locations high quality, I think so, right? But what do you think? What do you think about my presentation? And you agree or disagree? Tell me whether you live in Florida. You share with me your comments as to what you might think it could happen in Southwest Florida, or it's going to crash in the next 12 months, 30, 40, 50% drop, whatever. I don't think so. All the fundamentals, for the most part, are still there. High quality living, good job growth, good population growth, at least during the pandemic, right? During the pandemic, a whole bunch of people are migrating into Florida. But now things have changed just a little bit, not that much. We'll see. Again, if you see any value from this presentation, please like and subscribe to my YouTube channel. And finally, if you want to learn more about real estate investing opportunities all over the South and Southeast, turnkey cash flow properties, put your email into my website below you on a newsletter. So you become a free member of our real estate investment network. So you can see weekly, daily emails coming to your email inbox. They will share with you about all those real estate investment opportunities that are available in very good cash flow markets, in high growth markets. That's what I have to say. Thank you so much for watching. I will see you next time. Have a nice day. Bye-bye.